Hello students, good morning. In the last videos we have discussed about so many theories, right? About IFRS, theories of IFRS, scope, principles, general accepted accounting principle, difference between general accepted accounting principle and IFRS, and so many things we have talked, right? From today onwards we are going to start about Indian accounting standards. As per your syllabus, Mangalore University syllabus, you are going to study about 24 Indian accounting standards. So before that, we should know the basic of Indian accounting standards. In the present era of globalization and liberalization, the world has become an economic village. Yes, right. The globalization of the business world, the attendant structures and regulations which support it, right? So as well as the development of e-commerce make it imperative to have single globally accepted financial reporting system. A number of multinational companies are establishing their business in various countries with emerging economies and vice versa, right? The use of different accounting framework in different countries which requires inconsistent treatment and presentation of same underlying economic transactions, so which creates confusion for users of financial statements. So this confusion leads to inefficiency in capital markets across the world. So therefore, increase in complexities of business transactions and globalization of capital markets, which call for a single set of high quality accounting standards. As we know, international financial reporting standards are considered as principle based set of standards. In fact, they establish broad rules rather than dictating specific treatments. So every major nation is moving towards adopting them to some extent, right? So let us understand the meaning of accounting standards. What is accounting standards? So accounting standards are written documents. Understood? So these are the written documents or policy documents issued by expert accounting body or by government or other regularities or regulatories body covering the aspects of recognition, measurement, treatment, presentation and disclosure of accounting transaction in the financial statement. So accounting standard in India are issued by the Institute of Chartered Accountants of India. Now you understand the meaning of accounting standards. So accounting standards are written document or policy document issued by some experts. So experts may be accounting body or government or other regulatory bodies. So these covers the aspects of recognition or these covers the aspects of measurement, how to measure, and these covers the aspects of treatment, how to treat the different transactions in a different account, and presentation, and also which covers the aspects of disclosure of accounting transaction in the financial statement. Then what is the objective of accounting standard? So objective of accounting standard is to standardize the diverse accounting policies and practices with a view to eliminate to the extent possible the non-comparability of financial statements and add the reliability to the financial statements. And also the Institute of Chartered Accountants of India, which are recognizing the need to harmonize the diverse accounting policies and practices constituted in accounting standard board, that is already you know that ASP, on 21st April 1977. As per your Mangalore University syllabus, you are going to study about 24 Indian accounting standards. So before that, we'll see which are the 24 accounting standards. So at first we are going to study about Indian Accounting Standard 10, that is events after reporting period. and Indian Accounting Standard 12, that is income taxes, and Indian Accounting Standard 16, property, plant and equipment, Indian Accounting Standard 19, employee benefits, Indian Accounting Standard 20, that is government grants, and 21, the effects of changes in foreign exchange rate, and 23, that is borrowing cost, and 24, that is related party disclosures, and 32, financial instruments, that is presentation, and 33, earning per share, and 34, interim financial reporting, 36, impairment of assets, 37, provisions, contingent liabilities and contingent assets, and 38, intangible assets, and 40, investment property, and Indian Accounting Standard 41, agriculture. And also we are going to study about IFRS 2, that is International Financial Reporting Standard 2, share based payment, IFRS 5, non-current assets held for sale and discontinued operations, and 7, that is financial instruments disclosure, and 8, operating segments, and 9, financial instruments, and 13, fair value measurement, and 15, revenue from contract with customers, and at last, that is IFRS 16, leases. So in these, out of 24, so in some standards there may be a problem and solutions, and other standards we will explain, we will study about the theories of these standards. What is the purpose of studying these standards? So these standards which reduce to a reasonable extent or eliminate altogether confusing variation in the accounting treatment used to prepare the financial statement. And also there are certain area where important information are not required by law to be disclosed, or standards may call for disclosure beyond that required by law. And also it facilitates comparison of financial statements of different companies situated in different places or in different countries. This is about the important basics of Indian accounting standards as for your Mangalore University syllabus. I hope this one is understood right. From the next class onwards, we are going to study about one by one. That is, we are going to study about each standard with detail. Thank you. If you have any doubts, you can clarify it. Okay. From the next class onwards, we will start with problems and theories. Thank you.